Hello guys, welcome back to my channel. Don't forget to like, share, comment, and don't forget to subscribe. Crypto will become an inflation hedge, just not yet. Crypto can act as protection against inflation, but not until it establishes its fundamentals and achieves mass adoption. In theory, Bitcoin or BTC should serve as a hedge against inflation. It's easy to access, its supply is predictable, and central banks cannot arbitrarily manipulate it. However, investors are not treating it that way. Instead, the cryptocurrency market is mirroring the stock market. Why is that? Let's dive into what prevents cryptocurrencies from acting as a hedge against inflation and what needs to happen to make them a hedge in the future. Crypto could be a hedge, but it comes with inconveniences. Cryptocurrencies present a unique solution given their lack of a central governing bank. You can't lose trust in something that doesn't exist. Its supply is finite, so it naturally appreciates in value. People using a blockchain with proof of stake protocols can access their funds at any time, while continuously earning staking rewards on their current balance. This means that the actual value of annual percentage yield is tied to the economic activity on the chain via its treasury and staking reward distribution mechanics. Those properties seem to address the cause of inflation in the traditional monetary system, but some roadblocks remain. For starters, let's examine the reason why people invest in and hold cryptocurrencies. The majority of cryptocurrency holders see the future potential of those technologies, meaning some of their value is not currently present. They are speculative investment. Decentralization has been achieved by Bitcoin, but its exorbitantly high energy cost remains unaddressed, and the majority of mining forces are still aggregated into a dozen mining pools. Ethereum has similar issues with energy consumption and mining pool centralization. Ethereum also has a security problem. More than $1.2 billion has already been stolen on its blockchain this year. There's also the issue of decentralized exchange, or DEX, which are currently not as fit for use as centralized exchange. The DEX with the highest transaction volume, Uniswap, offers inefficient pricing compared with a centralized exchange. A simple trade of $1 million in Tether for USD coin would cost over $30,000 more in fees and slippage than when executed on a centralized exchange. These are technical problems that have solutions. Granted, these issues are being addressed. Several third-generation blockchains are tackling energy consumption and decentralization head-on. Privacy is improving. Crypto holders are beginning to accept that their wallet will always be fully traceable, which will prove unceasing to new users who have previously been hesitant over blockchain hypertransparency. Projects seeking to merge traditional finance mathematical rigor with the native attributes of cryptocurrency are tackling the problem of tax inefficiency. Maybe it's that from me. Thank you for listening. Don't forget to subscribe. Thank you. Goodbye.